thanks, Sean, for taking some time to chat a little bit about 1031 exchanges. I know that super important and critical part of being a property owner and investor when you're trying to trade up or trade to different properties. So I want to take a look with you.
I have a couple questions.
And one, like I mentioned, I'm planning to sell a property or potentially sell a property this summer that is currently a rental. So, let's talk about what that means for me, and hopefully other people are watching can take some lessons and apply it to their situation.
Yeah, well, let's start with 1031s in a normal time, and then we'll lay on top of that the current craziness that we're all seeing right now. Okay. So, to start with, for anybody that might watch us down the road, a 1031 exchange allows you to defer the capital gains taxes and all other taxes associated with the sale of investment real estate, provided that you do a couple of key things. The most critical of those is you have to use the money to buy other investment real estate. And they're called like-kind exchanges. That doesn't mean you have to buy the same type of property or do the same thing with the property for it to count. The IRS is very liberal with what they deem as investment property. So you could sell a single family and go into a multifamily. You could do commercial and go to residential. You could sell raw land and go into something fully developed. You can even sell stuff and buy stuff like oil rights, mineral rights, water rights, that sort of thing.
Okay.
There are some syndicated and partial interest exchange options for people. If they don't know what else to purchase, they can always put it into what is ostensibly a mutual fund of real estate investments, or a multi-investor source deal where you buy something large like a hospital or a giant apartment complex. But to fully defer all of your taxes, the IRS imposes some limits and some guidelines you have to follow. The two most important are deadlines. When you first sell, you start two clocks. The first clock says you have 45 days to identify what you might want to buy next. And there's a lot of restrictions around that. And the second clock says you have 180 days to complete whatever it is you're purchasing, whether it's one property or multiple properties. All of that has to fall into 180 days from the date of your settlement when you sell.
Okay.
Now, there are changes to that based on the current disaster guidelines that the IRS released back on the 9th. This is currently April 13th. So on late April 9th, the IRS came out and said, we're modifying deadlines to give exchangers a little bit more time to find an investment property that they like, or to complete an exchange if they have an active one that's really in its last throes. Any questions so far?
Yeah, so, and then talk us through, what does that extension look like right now?
Yeah, well, we don't really know. The short answer is the IRS is not clear about this sort of thing. When they released the original tax extension, which said that all filers who normally file their income tax report on April 15th, that got pushed back to July 15th. At that time, it didn't include 1031 exchanges at all. They published a notice that amended that says, if you have a deferred deadline as part of a tax strategy, that deferred deadline gets pushed to July 15th. So if your 45-day clock ends for identification, if that clock ends somewhere between April 1st and July 15th, or if your 180-day clock ends somewhere between April 1st and July 15th, whichever deadline that is automatically extends to July 15th. Okay. So ostensibly, if you sold on March 1st, then your last day to identify would be around April 15th typically. Well, this says no, now you get till July 15th to identify, but that doesn't affect your 180-day completion deadline. Similarly, if you purchased sometime in November, then if you sold your investment asset sometime in November, then that means your 180-day completion deadline would fall within the new extension window. So your 180-day completion window gets extended to July 15th automatically, but it doesn't affect, in that case, your identification window, which already passed.
Okay.
Because that 45-day window completed before April 1st.
Okay.
Beyond that, it's really open. That there are a lot of really clever people with a lot of knowledge in this industry that have thrown their hands up and go, we don't know what this means.
Intentional, I think, right?
Yeah. Well, it was interesting.
Put something out there.
I've conversations, with attorneys and CPAs and other exchange accommodators And we have a book. It's around here somewhere. We call it the 1031 Bible. It's written by this brilliant woman named Mary Foster, and we consulted with her, and she said, "I don't know." So nobody really seems to understand what the IRS has in mind here. I don't think they thought it completely through. It feels like it was rushed out.
Yeah, just to get something out there to look like they're taking some action and help.
Yeah.
So
I think so.
Yeah, that makes sense. All right, so with the 45-day identification deadline, so what does that look like? If I'm selling, I'm closed on my investment property, say August. Now I'm looking up for a new property. What do I need to do within that 45-day window? How do I prove that?
Yeah, I'll caution this by saying one thing: your 45-day ID clock doesn't begin until you sell. So we tell people you get to extend that as long as you want by starting to look before you sell. Mm-hmm. That if you start looking the 2 months before you sell, your 45 days is now 105 days, right? It's a really intelligent thing to do, and it's by far the most limiting factor of most exchanges. That 45 days goes by quickly, especially if you're in a hot market or right now in a really slow market, because properties that you might like go by fall off the market very quickly. So what happens is you sell. Your exchange accommodator, whatever 1031 company you're working with, sets it up so that the proceeds from your sale go into an escrow account. When that happens, the IRS says you have to let your accommodator know which properties you're thinking about buying, but they don't have to be properties that you have any real intent of making an offer on soon. It's just one that you're looking at. So identification looks like, hey, we saw this property down here, we took a look at it, we're interested, please add it to our list. And you can identify up to 3 of those at any given time. If you identify more than 3 at any one time, the rules get complicated, and we advise that you don't do that. We can get into what those complications are later if you like. You identify up to 3 properties at a time. Until the end of your 45th day, you can rotate out different properties and keep changing which 3 that you tell your accommodator you're interested in purchasing. Now, at the end of your 45th day, you're locked in. Whatever the last 3 properties you ID'd with your accommodator, you have to purchase 1 or more of those to complete your exchange. Otherwise, you don't defer your taxes.
Okay. Makes sense. Now, even before, backing up from the day that I'm closing on the property, what should I do if I know I'm going to sell, if I'm going to list, let's say in July, I know I'm going to trade, I'm going to use a 1031. What should I be doing with a company like you?
Yeah, first, you need to make sure that you don't need any of the proceeds for something else. That if you're going to sell a property, let's say it's a $500,000 property, and you have $300,000 of debt on the property still, that $200,000 of proceeds that you're going to be using and putting into the next asset, you want to make sure you don't have another important use for those that justifies you pulling them out and paying taxes on them. If you have a cash flow issue, or you just want the funds for another project, you should speak with a 1031 company or a CPA in advance to see what your options are. The second thing you should do is immediately begin hitting the pavement. I guess nowadays you can't do that. You would try to set up virtual tours and try to find assets that you're interested in. And then if you are, when you start negotiating or letting people know, hey, I'm interested in buying this property, we also advise that you don't tell them that you're in the 1031 exchange. Because if you tell somebody that you're in a 1031 exchange and they're a savvy investor or a savvy seller, they'll know you have deadlines fighting against you, and they could use that as leverage against you. And we don't want our clients to lose any leverage. So you don't have to disclose you're in an exchange. There's a lot of confusion around that. And then the other thing you want to do is, if you don't have a QI, a qualified intermediary, which is a company like ours, lined up, do your homework and make sure they're around. They've been around for a while. They know what they're doing. Every year we hear horror stories of some intermediary that took $100 million and ran to Mexico. Most of them get caught, not all of them do, but it's a loosely regulated industry. So be sure you know who you're working with.
It makes a lot of sense. With your company, what are some things that help you guys kind of stand above the crowd of intermediaries? Yeah,
so most qualified intermediaries who've been around for more than a couple of years, and there are some good new players on the scene, but by and large, you want to focus on ones that have been around for preferably a couple of recessions, right? Prove that they have some staying power. Our company's been around for almost 30 years now, and we do exchanges nationwide. But most intermediaries can handle basic exchanges. And I've talked with a lot of other exchange companies. I like most of them. If you're somebody close and nearby that you really like, there's nothing wrong with just going with local folk. But if you want, especially if you're going to be purchasing across different asset groups or across different states, you'd like somebody with some national exposure. And then you also want to make sure that either they're handling your funds in what we call a non-commingled way. And the state of Colorado actually requires this. So after the last recession, the state of Colorado came out with some guidelines and said, if you're going to be helping people with 1031 exchanges, when they sell their properties, you're not allowed to take their money and put it into a big pot. And you're especially not allowed to take that big pot and go invest it in stuff, which is what used to happen. So you want to make sure that they're setting up every account in, if you're selling as yourself in your name, if you're selling as an LLC in the name of the LLC, and that they're keeping that in a separate individual FDIC insured account.
Okay.
And you might want to ask them who they're banking with, which bank is protecting their assets, how safe is their bank. Banks are being stress tested right now with all of this going on. So just make sure that they know how to handle tough environments.
Okay. You
also want to check for their fees, and you want to make sure that they can handle complicated exchanges should something arise. There are a lot of title companies that have good 1031 services. A lot of CPAs and attorneys have good 1031 services for very basic exchanges. But if you want the insurance to know that the IRS isn't going to challenge your exchange should something come up, then you go with somebody like our company that has been there before. We've had some exchanges challenged in the past, but we've never had an exchange overturned, and no clients ever paid a nickel in taxes beyond what their intention was at the beginning of the process.
Okay, awesome. Now, talking about fees, so what does that look like? Because I know if I'm selling my property, if I'm not an agent, I'm typically concerned about my closing costs and my realtor fees. Now, if I'm wrapping in a 1031, what does that look like?
Yeah. Average exchange fees range between, say, $600 and $1,200 per exchange per sale. That's standard. Some charge more for larger deals. Some charge a flat rate. We charge a flat rate, for example. There can be additional fees in the 1031 process. What I'll say is the exchange fees, to some extent, are softened by the fact that you can deduct them from the sale cost of your exchange asset. So whatever you're selling, all of the costs of closing, including 1031 exchange fees, realtor commissions, title closing fees, all of those reduce in the eyes of the IRS the amount of money that you have to reinvest in order to defer all of your taxes. So if you sell the $500,000 house, but you have $20,000 in closing costs, then in the eyes of the IRS, you don't have to purchase $500,000 worth of new property. You only have to purchase $480,000 worth of new property because they deduct all of the closing costs. So whatever the exchange fee is, it works in your favor that way, or helps soften the blow of the fee you have to pay. Our exchanges cost $1,000. If you have multiple purchases, there are circumstances where you can pay more if we have to prepare multiple closings. And if you have to handle the money differently, and there are instances when you have to do that, handling earnest money or splitting accounts, sometimes there are additional fees there too. But normally you shouldn't pay more than $1,000 to $1,200 for any exchange.
Okay. And that brings up, you kind of mentioned something about closing and about title companies.
Mm-hmm.
Title company in a standard resale transaction, right? It's typically handling the closing. Where do you guys fit into that typical system?
Yeah. Most of the work that we do is coaching title companies, or if we're working on the East Coast or some states in the West Coast, it's usually attorneys' offices that handle this, not title companies. So what we do is we contact your title company. We have a conversation with the closer. If it's one of the big players in the state, they've worked with us 100 times and they know. But we make sure that they're handling not just the funds correctly, but you have to itemize and describe the settlement statement in an accurate way. So when the IRS reviews your file, it looks like you handled the exchange properly. So you don't want an audit triggered for no reason. So we coach the title company through that process. We set up an escrow account. So when the title company receives the payment from the buyer, They can take the part that should go as sale proceeds in a normal transaction to the seller. They take those in a 1031 exchange and route them to the escrow account that we've set up for our client. And the funds sit there until our client tells us, okay, I'm going to close on this new purchase. Please send the funds to that title company so that they can pay the seller.
Okay, that makes a lot of sense. So awesome. So you, as a company, you guys are really there along with, essentially, you're another partner, like an agent is with that client, who's a worker that's selling work of new properties.
Yeah.
You're essentially an equal and critical partner in the process.
Yeah, we spend a lot of time on the phone with lenders, with CPAs, with agents and brokers, and with title companies. And then if we need to, if the counterparty has questions, because some people look at a 1031 exchange and a contract and have no idea what's up, they're worried that it might impact them in some way, then we'll talk with them too and make sure that they are clear and the deal doesn't get blocked up for some reason.
Oh, that makes sense. Well, that's awesome. Is there any, I guess advice for people where you're like, man, I've seen this kind of go awry, and here's what you do not want to be doing. Don't do this. Is there anything that you would say for people out there?
Yeah. So there's a couple of 1031 hurdles that you want to clear. One is there's some people get it in their head because sometimes it's worded confusedly when you read it on the internet, that you only have to reinvest the proceeds, the sale proceeds, the net proceeds of your sale to do a 1031 exchange. That's not true. That's one part of it. You do have to reinvest the net proceeds, but you have to replace all of the value of the asset that you're selling. So if you're entering into an exchange thinking that 50% of this is debt, so I only have to reinvest to 50% of the value, you might start an exchange process and then realize you're going to have to purchase a lot more than you were hoping. So know that you have to replace whatever the net sale price after closing costs are considered. Whatever the net sale price is, that's how much you have to purchase on the back end to complete a fully deferred exchange. Other issues we see are, go ahead.
Just to kind of build on that. So again, personal example. So if I'm selling a $420,000 home, single family home that's being rented, I need to find in one or three assets $420,000 worth of, or $400,000, we'll say, based on closing costs. That's right.
Okay. Exactly right. And what we see a lot of people do if they're if they really like playing with debt, and maybe the current environment changes that, but we'll see them just figure out how much equity they're getting out of the transaction, and then they'll lever up to the hilt and purchase multiple properties based on that. That's a pretty efficient way to make sure you're never going to trade down in value. If you do a 1031 exchange, let's take your example at $420,000, and you end up buying for $375, right? Or you end up buying for $380. Your exchange doesn't fail, but that $40,000 gap is going to become taxable. And what the IRS is going to do is they're going to tax it at the highest possible bracket first. And for most people, the highest tax bracket is depreciation recapture, which is taxed at 25%. And then if you have less than $40,000 worth of depreciation recapture, then they'll start factoring in capital gains tax rates. And then on top of that, there's the net investment income tax, which is sometimes called the Obamacare surcharge tax. So for all income that you declare over $200,000 for any given year, that's taxed at 3.8%. So that's another tax that gets deferred with a 1031 exchange, but if you trade down in value, you might expose yourself to.
Awesome. Yeah, those are all like super helpful info pieces. I mean, that's awesome. So thank you.
Yeah. So one other item to consider here is if you're exchanging from, I don't know if you're selling in your own name or in the name of entity, but you have to have the same taxpayer on both legs of a transaction. So if you're selling individually, you have to be able to report the 1031 exchange on the same income tax return. And this also can be confusing because there's no rule that says you have to have the same taxpayer on both legs of an exchange. But practically speaking, there's only one way to report one, and that's on a single income tax return. It's just practically impossible to change who the taxpayer is midstream. So if you have one LLC with a couple members and you want to hold the next property in a different LLC with multiple members, you're going to have to do some fancy footwork either before or after the exchange to make that happen. So just make sure that whatever you're doing, you've talked with your accountant or you've talked with your exchange coordinator to make sure that you're not going to get caught in a bad situation.
Okay, awesome. Well, Sean, I mean, this is really helpful information. I really appreciate your time, your expertise. I know that I'll be reaching out to you guys here soon to talk about this exact process. So, hopefully anybody out there watching, if you have more questions about the 1031 process, about income properties in general, please reach out. Happy to make the connection to Sean and his team. And if Sean, if there's anything else you want to close with, please do.
Just that we're getting a lot of questions right now about what to do if you've had a deal fall through because of the coronavirus outbreak. The extensions that came down on April 9th did help a lot of people, but not all 1031 exchanges were helped, particularly if you had a deadline that passed just before April began. So call us or contact me directly if you'd like. My email is sean@1031x.com, and we'll be happy to check out what your other options are. It could be that you could transfer into a qualified opportunity fund, or there's some other replacement assets that 1031 exchangers tend to park their investment in if they don't know what else to buy. And we'll be happy to walk you through that process.
Awesome. Well, that's great, Sean. I really appreciate it. And look, I'll include the link as well in the post and in the share. So go to the website, check it out, sign up for more information on that. Some great information on the site. Again, thanks for watching, and you guys have a great day.